All right, what's up, everybody? Welcome back to the channel. We're gonna discuss a few things. We're gonna keep this video as like a no-nonsense type of video where I'm just going to tell you what I think is happening, what I'm looking for to happen in the next week to come, more so than I'm looking for in the next several months. This was a bear market. Nobody is disputing that fact at all. We did see a bear market. The market structure shifted right here when we broke under the 21 exponential. And if you are new to the channel, welcome. If you're not, welcome back. But my followers know that I don't really start to get super bearish, or I don't even really start to get bearish until we've started closing weekly candles under the 21 exponential, because in a lot of times it keeps you on the right side of the trend. And in my opinion, being on the right side of the trend, even for intraday trades, is much better than looking for a trend reversal trades and continuation. What I mean by that is simple. If you look to get long in an uptrending market, even for your day trade scalps, you're going to get a lot more continuation to the upside than you will if you were, for instance, looking for bearish continuation. Let me give you our expected move. Now, next week, we are seeing an expected move of 64.6. I typically round up. So $65 is what is expected out of this week. Last week, we had a $61 expected move, but it was a shortened week. It was a 4-day trading week. This week, we have a 5-day trading week. Now, July the 4th will be in next week's trading week, so we are kind of sandwiched in between two short weeks. So the volatility may be muted this week, but it is very possible that we see a $65 move next week. With that being said, your expected move for next week high will be 55.28 spot 61, and your low expected move would be 54 spot 61. So 5,461 cents. That is going to be the low edge of the expected move, and depending on how many days it takes to get there, if it gets there, you will be coming up to your 21 on the daily, which is nowhere near the weekly 21. So yes, we could start to see a pullback. Obviously, I know that we have bearish divergence on the weekly time frame, but we had bearish divergence for several weeks now. We've had bearish divergence on the close of this week. So this divergence has been here on the chart for a while. Obviously, when we closed this week above, that's when the divergence failed. You had 2 weeks of correction and then 3 weeks of straight upside. So essentially, anybody that got short looking at this weekly divergence is now been stopped out. I would assume that, yeah, we could potentially see this play out in a couple weeks to come. If the unemployment, or let's say a couple months to come, if the unemployment rate continues to go higher. All right, so with that being said, I still have a bullish look, but I am starting to look for a hedge. Please keep in mind, when you put on hedges, your hedges are not supposed to make you money. Your hedges are only supposed to protect any downside or significant downside risk in your long holdings portfolio. All right, so here is the unemployment chart. You can basically see that since it bottomed here, it has been making these upside moves, but it's been jagged, right? You've had a move up, then a move down, then a move up. Right, it's choppy, very, very choppy, as it tends to be. Okay, this takes a long time to play out. I'm not looking for this number to just automatically start to go parabolic, whereas I have seen a lot of your uber bears talking about this number should be closer to 4.6 according to the markets. We are at 4% unemployment. If this number continues, I would have just expected to continue to be slow, methodical move to the upside. If it does shoot up, then obviously we're going to have problems. As long as we continue to just slowly move to the upside, it's literally within the Fed's plan. As long as the Fed doesn't have to start cutting rates quickly, significantly, and aggressively. All right, so here is the weekly time frame on Bitcoin. You can see that we are in a consolidation period here. It does look kind of like a double top or a triple top or a quadruple top, whatever you want to call it. This descending trend line here did ultimately hold it, but you are in a wedging formation. And remember, as far as I'm concerned, we could trade all the way down and take this low out as long as price shoots back up into the range. The range that I am talking about is this range here. As long as price gets back up into this range. So if we trade down here and we take this low out, I want to see price get back up inside of this range and then make a higher low and then continue back to the upside. If we get that, ultimately, this is a rounding bottom formation. It's a cup and handle formation. It's accumulation formation. It's a bullish signal. So even though we have had 2 weeks of correction, I guess you could call this a corrective week because it did ultimately get up around the highs, but then rejected and closed back under the trend line. And then the next week was bearish. You could say that that's essentially when your pullback started. So this pullback was actually on a Friday. All right. It was like Friday the 6th or something like that. Friday, June the 6th. So you've been pulling back for 3 weeks, give or take. But notice how small the weekly ranges are. If this was bearish, I would want to see big weekly bearish candles, big ones. Like that, right? Like that's more bearish than what we're seeing for now. So as of right now, my thesis remains this is a rounding bottom formation, also known as a cup and handle. Last week, I showed you that Apple did the exact same thing, except Apple went down and made a fresh low and then ultimately traded up and broke out of the cup and handle formation. And it took a long time for it to do it. So I'm not really expecting this play out anytime soon. However, this is my ultimate thesis for now. If we break this low with a significant candle and start making lower highs and lower lows, then my thesis will probably change. As of right now, I'm not holding any open short positions on Bitcoin. I do look for scalps inside of Bitcoin. I look to try to capitalize on moves up and moves down based on the weekly order flow. Right now, I do still kind of have more of a bearish lean, if you will, just because this trend has been so well defined to the downside. I'm not expecting that to change unless it does. Basically, if you break back out above that trend, then obviously I would be looking for moves back to the upside. You can see that that range is pretty well defined. You are making lower highs and lower lows. And a lot of people are looking at the 4-hour moving averages. I don't look at moving averages on anything lower than a daily. But on a 4-hour, yeah, it does look like your structure here has changed. You could even put on the 200 simple and you're starting to see that curvature. And then the purple line is your 200 EMA. So you do physically have a bearish look here, whereas the 200 EMA crossed the 50 EMA. That is called a death cross, but it's on a 4-hour, and I don't put a whole lot of weight with moving averages on anything smaller than a daily time frame. If we go back to the daily, you're going to see that, yeah, we are testing the 100 exponential. This line here that is kind of acting as support is weekly demand, and that's from this bearish candle right here. That was the last bear trap candle we had. It's only a bear trap because it closed under the lowest closing weekly bearish candle, which was this one, and then we ultimately took out the high of that candle and closed above the high. So this bullish candle did say that this was a bear trap, so I wouldn't doubt it at all if Bitcoin weren't to start going back up. This dotted line, trend line, is going to ultimately be the area to watch for bullish entries moving forward, in my opinion. So going back to the 4-hour time frame, looking at this trend line, if you do break out and start closing, dailies above it, I would look for those bullish entries on those higher swing lows, higher lows. All right. So that's kind of what we're looking for. If this line continues to hold, then obviously my intraday scalps and I will be looking for downside entries. A lot of people are going to be looking for bullish entries in and around $64,023, which is that weekly demand level. And in my opinion, as long as you're not closing dailies under it, I think you're okay. But since it's a weekly level, just please keep in mind that you can close daily candles under it and still be a move to the upside. If you get a bearish candle that looks like this, then I would say things are going to change. The reason I like the pound versus the dollar better than euro dollar is simple. The pound versus the dollar is right here at its 2024 yearly open. In my opinion, that was the trade. Unfortunately, that occurred on a day off, so I wasn't looking at the charts. I generally will not trade Forex if the stock market is closed. However, I wish I would have been watching this day because it did give an optimal entry signal for a short, especially being that we broke down below daily support, which would have been your lowest bearish close until this candle, which would have been this one. So you did break down out of this upward trend and you closed under support. So a 3-day bullish correction, this would have been a phenomenal entry based on supply, based on the 2024 yearly opening objective price. I would have absolutely 100% hit the short sell button right there at 1.27401. Had I been paying attention, I was not. I do have a bearish bias now on the pound, and I will be looking for potential moves back to the upside. I'm not going to put it on that wick right there because that is, in my opinion, way too steep of a bearish correction. So I will wait until I get a retest of either this area here, or even if we trade all the way back up to that, I would look for short side entries. Anything around this in here, I would look for short side entries. Now, depending on how strong the dollar continues to move higher, will depend on the strength of this downside trend. This white line right here is very important. This is Q2, which is the quarter we are currently in for 6 more days. This is Q2 open. All right. So as long as price is above this white line, you are bullish on the quarter. So you can see in the next 2 to 3 days, if we close a bearish candle under and maintain that close under, then either one of these two areas, this line or this line, will be good areas to look for short trades moving forward. So essentially what I'm saying is we may have already missed the optimal entry up here. I mean, if you want to watch for potential entries there or potential entries at Friday's high, you could, or this daily support, right? If we get a pullback up to that, yes, you could, but I think what you're probably going to see is you're going to see something more like that, and then a long-term correction back up in here and then lower. All right, so that's what I'm looking for on the pound in the long term. I am looking for it to continue lower, and that is as long as the dollar continues higher. And I like the pound better than the euro is because we're only 3 days out of a retest of the 2024 yearly opening range, and that's the year we're currently in. That's why I am watching this for potential short side entries. I will keep people updated inside the Discord. The IWM is also a market that people look at based on the overall stock market. They don't like to be bullish the S&P 500 right now, while only 3 stocks alone are the bullish rally for the S&P. So they look at the IWM and they say, well, this thing is just barely trading above the yearly opening range. I think that we could look for bullish entries on the IWM as low as 198.76, as low as 198.76, or sorry, 198.73. As long as you're holding that area on a daily closing basis, I think we can look for bullish entries, probably in a bullish spread, an option spread or something like that, to see if we can get any bullish continuation. As long as we're above the yearly open, I like it higher. Even though we did get a bounce off of it here and then we came back down instantly, I don't really like that. And this does look like a downtrend. But if you look at the overall price, it looks good. This is another potential cup and handle formation here. And I know it's a big one, but it still is what it is, right? There it is. Right there's your cup. This is your handle. So we could potentially see this move higher in the future. And if we do get that, then I would say, yeah, we're probably going to see the broader S&P 500 continue its bullish trend. Oil has made a bullish engulfing monthly candle, but I am looking for oil to ultimately roll over. It's just been very, very bullish, and it's been killing short side sellers. This is May's open, this white line here, and we are under it. Now, we did take out the high, so as long as we're closing dailies under, what is that, 8109, 0.97, I will look for a short entry here just because I think the US will start to sell reserves to keep inflation lower for the election. It's just an opinion. It doesn't mean it will happen, okay? It's just an opinion. I believe that is the one thing that the US can do that will drastically affect inflation. And as long as we have very cheap oil or cheap oil prices, then inflation will look like it's under control. And we do have oil in reserves that we can sell. And this does look to me like it was literally just accumulating stops. I would say a lot of people, let's get rid of all these levels, as there's only really two here that matter ultimately. These last 4 days here, I think was just an accumulation of a lot of short sellers trying to get ahead of the next move down. That is, if we start to see sell on our reserves. I think we will, but it's just a guess. But I am still looking for a downside entry on oil, and I am looking for it around the $80 to $81 area. In this area here, I am looking for a short side entry. I'm probably just going to buy puts, long dated puts, all right, because this could take weeks to play out before it ultimately rolls over. If it rolls over, I could be totally wrong, and probably will be wrong if we see any upside continuation with daily closes, right? If we see something like this, I am probably wrong. So with that being said, make sure you guys trade safe, make sure you guys trade smart, and as always, happy trading, everybody.